Hello, everybody. Welcome to Thursday. The S&P 500 was down 2.1% today. Most of you know that when I wear this red shirt, that means the market dropped more than 1.5%. And normally wearing this red shirt means bad things for our portfolios. Interestingly enough, it actually means good things now because starting at the end of August, we started reducing the exposure dramatically to the stock and bond market to the point where we don't have any more exposure, placing that money in T-bill, treasury bond, and ultra short-term bond ETFs. And then we put last week, Thursday of last week, a week ago, some portion in an inverse that goes the opposite direction, the S&P 500. So S&P 500 was down 2.1% today. That inverse was up 2.1% today. So our models actually made money. And everybody's got a little different experience. You might still have some stock out there because of legacy positions that you want us to keep or things that have high capital gains. But overall, this market coming down has actually now become a good thing. And I know that gets a little confusing, but what's happening here is the market's just showing so much weakness, and that's why we're doing what we're doing. And I mean, this is a great example. I mean, yesterday the market was up quite a bit, very strong. Should have been some follow through to the upside. Normally, it was seen things really start to maybe recover a bit, at least for a few days. Didn't happen today. Opened up lower, just came down, what have you. So this particular environment is very difficult because there's just so much pressure with all the Federal Reserves of the world, raising interest rates. And you've got England who's actually trying to lower their taxes, which is inflationary, and going to finance that with debt, which really creates problems for their currency, which is hitting an all-time low. A couple of days ago against the dollar, we had a 10% inflation rate come out of Germany, and et cetera. So, things are kind of strange there, but just keep in mind again that your portfolios are benefiting from some of this at the moment, and we'll continue to do that. We did add some more in the inverse position, inverse to the Dow Jones. So this particular thing will go the opposite direction of the Dow. So we'll see how that plays out, and we'll just keep going with this. Now, I will say that although we did close at the lowest point for the year, and we actually hit the lowest point in the middle of the day for the year on the S&P 500. We're not that far off of the lows that were established here, recently and in the middle of June. So we could recover, we could come back, but this is sort of that last line of support before we kind of maybe come down. So this is going to be very critical what happens over the next few days as to how that plays out. But so far, our positions are working quite well. We'll see how that goes. But looking forward to being able to kind of talk to you again tomorrow. I do my YouTube show, a live stream, Talk Money with Tom. Beginning of that show is a summary of what I saw happening in the market. You can send in questions, ask anything you'd like, and we answer that during the show from 12:15 to 1 Pacific time. So if you'd like to join us, please do. And look forward to seeing you then. Thank you very much.